Hello and welcome to Channel 1 Local. I'm your host, Brian Christopher, and I want to thank you for joining me. Today we're going to discuss who Ripple, Stellar, XLM, and XRP are and what they're all about in this future of global finance. We're going to break down these two most significant blockchain projects that's reshaping the financial infrastructure across the world. So if you've heard of these names, but you're not quite sure who they are, what they do, and why they matter, you're in the right place. This isn't going to be about speculation or price predictions. This is going to be about understanding the infrastructure that's quietly being built beneath the surface of our financial system. Here's what we're going to explore. Ripple and XRP, a technology designed specifically for banks and financial institutions to move money across borders instantly. Think of this as a modern replacement for an outdated system that takes days and costs billions in trapped capital. Then we're going to discuss Stellar and XLM, Ripple's philosophical cousin that took a different path, focusing on financial inclusion for everyday people and underserved communities rather than big banks. We're also going to do that deep dive on RLUSD, Ripple's dollar-backed stablecoin that's becoming a crucial piece of regulated digital infrastructure, and explore how Ripple is positioning itself as a global liquidity provider for the entire financial system. Let me repeat that. We're going to explore how Ripple is positioning itself as a global liquidity provider for the entire financial system. So throughout this video, you're going to come to understand not just what these technologies are, but why they're emerging into the public eye right now, and what problems they're solving, and where they're going to be headed over the next 12 to 36 months as they integrate even deeper into the global ecosystem of finance. So whether you're curious about technology, trying to understand investment theses, or simply want to grasp how money will move in the digital age, then this video is going to give you clarity without the hype. And before we dive in, I want to put out this disclaimer. I need to be clear about something that's very important. Everything that I'm sharing in this video is purely educational. I'm not a financial advisor, and nothing here in these segments is going to be given as financial advice, nor should it be taken as any financial recommendation to buy, sell, or invest in anything. My goal here is to help you understand the technology, the infrastructure, and the shifts happening in global finance. What you choose to do with this information is entirely up to you. If you're considering any investment decisions, please do your own research and consult with a qualified financial professional who understands your personal situation. I'm just here to break down complex topics and share what's happening in the world. The rest is up to you. So let's dive in to Ripple and XRP. There is confusion about both of these. So let's be clear from the start. Ripple is the company, specifically Ripple Labs, a technology firm based in San Francisco. XRP is the digital asset, the cryptocurrency that runs on the XRP ledger. Think of it like this. Apple makes the iPhone, but they're not the same thing. Ripple builds payment solutions, and XRP is the fuel that powers certain functions within their ecosystem. And here's the core problem that they're solving. Right now, when a bank in the United States wants to send money to Japan, that doesn't happen directly. The money travels through a network called SWIFT, SWIFT, which has been around since the 1970s. It's slow, expensive, and requires banks to pre-fund accounts in different countries. These are called Nostro accounts, where billions of dollars just sit idle, locked up as collateral. Ripple's solution is essentially a modernized highway for money. Instead of taking days and going through multiple intermediaries, transactions happen in 3 to 5 seconds. The XRP ledger can process these transfers with transaction fees of a fraction of a penny. So let's go over how the protocol works. simply. The XRP ledger uses something that's called Ripple Protocol Consensus Algorithm, which is different from Bitcoin's mining process. Instead of thousands of computers competing to solve puzzles, a trusted network of validators agree on which transactions are valid. This makes it energy efficient and extremely fast. XRP itself serves as a bridge currency. Let's say that a bank wants to send US dollars to someone who needs Japanese yen. Traditionally, they need to have yen already sitting in an account somewhere. With XRP, the dollars convert into XRP in seconds. XRP moves across the network and then immediately converts to yen on the other side. The whole process happens faster than reading this sentence. Why this matters? Banks aren't excited about XRP because it's a cryptocurrency. They're interested because it frees up capital. Remember those Nostro accounts? Globally, there's an estimated $27 trillion sitting there, and those accounts doing absolutely nothing except acting as collateral for cross-border payments. Ripple's technology could unlock a massive portion of that capital, allowing banks to deploy it more productively while still facilitating instant international transfers. Where Ripple stands with this today, as of 2025. Ripple's received conditional approval from the Office of the Comptroller of the Currency to operate as a national trust bank, which is a huge regulatory milestone. In 2025 alone, RippleNet processed over 70 billion in cross-border transactions. Ripple has partnerships with over 100 financial institutions worldwide, including names like Santander, SBI Holdings, and Bank of America. They've also acquired Hidden Road, a prime brokerage firm that clears about $3 trillion annually and plans to integrate that volume onto the XRP ledger. So over the next 12 to 36 months, the next phase of Ripple involves several key developments. Institutional ETF expansion. Multiple spot XRP ETFs launched already November of 2025 from major asset managers including Canary Capital, Bitwise, Franklin Templeton, Grayscale, 21 Shares, and CoinShares. These ETFs are now giving traditional investors regulated access to XRP through standard brokerage accounts. The real opportunity ahead is watching how these products attract institutional capital and reshape XRP's investor base. Smart contract expansions. The XRP Ledger EVM compatible sidechain launched on mainnet June of 2025, successfully bridging Ethereum compatible smart contract capabilities to XRPL. Developers can now build and deploy dApps using familiar Ethereum tools like Solidity and MetaMask. In its first week, nearly 1,400 smart contracts were deployed, and a total value locked reached 100 million in the following weeks. The sidechain uses Alexar bridging. The sidechain uses the Alexar bridging for seamless asset transfers between XRPL mainnet and the EVM sidechain, with wrapped XRP serving as the native gas token. This opens up programmability for DeFi, NFTs, and more complex financial applications on the XRP ledger. And I want to interject a personal note for myself concerning my thoughts on NFTs. I don't believe NFTs have reached their full potential. I don't believe they're dead. I just believe that they're growing up. Look, now I know some of you might be thinking, well, when you mention NFTs, I think of those JPEGs. And I get it. I have lived through that era of apes, kitties, and yes, even penguins. And penguins, that's my favorite animal. I was happily willing to participate in those sandbox days and throw away money that I didn't have to throw away on pixelated cartoon characters with the best of them. It was wild, it was chaotic, and honestly, it was fun until it wasn't. But here's what I've come to understand. That wasn't NFTs failing. That was speculative hype cycling and doing what it does best. It burns hot, it moves fast before settling into something that's real. NFTs haven't filled their actual purpose yet and the new ecosystem. And that's what makes the next phase very interesting. The NFT market is projected to experience a significant comeback and maturation, moving beyond that 2021 speculative frenzy to become essential infrastructure in the digital economy. We're talking about integration into mainstream financial systems. So, why is it going to be different this time? The market has fundamentally shifted from the short term, short lived speculation to a focus on utility and sustainability, real world applications. Here's what's driving this transformation. The global NFT market, valued at approximately 48.74 billion back in the first of 2025, is projected to reach over 190 billion by 2030. That's a compounded annual growth rate nearly 35%. But more importantly, the use cases have matured. Major brands like Nike, Starbucks, and Disney are incorporating NFTs into their loyalty programs and customer engagement strategies. This isn't speculation, it's mainstream business adoption. Financial institutions like BlackRock are actively exploring asset tokenization, with CEO Larry Fink publicly stating that every stock and bond will eventually exist on a general ledger. That's not a crypto enthusiast talking. That's one of the most powerful figures in traditional finance, pointing towards a massive institutional shift. Technological innovations like layer 2 scaling solutions, dynamic NFTs that can evolve or update their metadata, and AI integrations are addressing past issues on high fees and lack of functionality. We're building more stable and trustworthy ecosystems now. NFTs as a core financial instrument. This is where it gets really, really interesting. NFTs are positioned to become a core financial instrument by bridging the gap between digital and physical assets, creating a more efficient, transparent, and accessible financial system. Those real world asset tokens is one of the most promising areas. NFTs can represent fractional or total ownership of tangible assets, making previously illiquid items accessible to a wider range of investors. So, in real estate, NFTs can streamline property transactions, replacing cumbersome paperwork with secure, immutable digital ownership records. Platforms like Realty are already tokenizing residential properties. Imagine buying a fraction of a commercial building in Manhattan the same way you would buy shares of a company. And for fine art and collectibles, NFTs provide verifiable on chain certificates of authenticity and provenance, reducing fraud while enabling artists to receive royalties on resales through smart contracts. The artist gets paid every time their work changes hands. This is fundamentally different in this economic model. In commodities and supply chains, NFTs can track goods from origin to destination, ensuring authenticity and creating transparent records for trade finance and invoice financing. Here's the DeFi integration. In other major developments, high-value NFTs can now be used as collateral to secure cryptocurrency loans on platforms like Arcade, providing liquidity without requiring the owner to sell the asset. You can borrow against your digital assets the same way you would take out a home equity loan. Fractional ownership is dividing up value assets like multi-million-dollar paintings or luxury yachts into smaller pieces, allowing everyday investors to own a piece of premium assets that they were previously out of reach to. Identity, insurance, and beyond. NFTs are also becoming unique digital identifiers for verification, like KYC, event ticketing, and loyalty programs, ensuring both security and user experience. Insurance policies can be tokenized as NFTs, leading to transparent, automated claims via smart contracts and creating a more efficient and accessible insurance market. So, for all of this concerning NFTs, my view on this is that NFTs, in the context of the XRP Ledger smart contract expansion, we're talking about things that go beyond monkey JPEGs. I'm talking about the financial infrastructure of the new digital economy. The speculation phase taught us what not to do. Now we're entering the phase of where NFTs fulfill their actual purpose, representing ownership, enabling fractional investment, and creating transparent, programmable financial instruments. I don't think NFTs are dead. Like I said, I believe they're growing up. Honestly, this version is way more interesting than the penguins that I love and that I took part in myself. So let's jump back in and continue the conversation about Ripple and banking. The deeper banking integration. Institutional lending features are expected to ramp up by the end of 2025, merging into 2026, including under-collateralized loan options that integrate RLUSD and real-world assets. Ripple isn't just building technology for crypto enthusiasts, they're building regulated financial infrastructure for the institutions that move trillions of dollars every day. That's the distinction that matters. So let's now jump into understanding who Stellar is and what XLM is. If Ripple is the suit and tie corporate solution for banks, then Stellar is the open source, community driven alternative that's built for everyone else. So here's the origin story for Stellar. Stellar was founded back in 2014 by Jed McCaleb and Joyce Kim. McCaleb was actually the co-founder of Ripple before leaving due to disagreements about the project's direction. He believes strongly that blockchain technology should focus more on individuals and financial inclusion rather than primarily serving banks. And we can see that in today's economy in 2025 due to developments that have happened just over this past week concerning the Marshall Islands. That philosophical difference is crucial to understanding Stellar. While Ripple targets institutions moving millions, Stellar focuses on individuals moving hundreds. People sending remittances home, small businesses in emerging markets, and humanitarian organizations distributing aid. And here's how Stellar's protocol works. Stellar uses the Stellar Consensus Protocol developed by a Stanford professor named David Mazaniers, which operates on a model called Federated Byzantine Agreement. Instead of a collateralized group controlling which transactions are valid, each node selects trusted nodes to form a quorum slice, and consensus is reached when each of these nodes agree. This design makes Stellar more decentralized than Ripple. Transactions confirm in 3 to 5 seconds with fees of fractions of a penny. The native currency is called lumens, abbreviated down to XLM, like unto XRP. It serves as a bridge currency for multi-currency transactions. When someone in Mexico, for instance, wants to send money to a family member in the Philippines, XLM can facilitate that conversion almost instantly. Stellar's unique infrastructure. One of the features that sets Stellar apart is what they call the anchor network. Stellar has developed an unmatched system with over 450,000 cash to crypto ramp locations worldwide that connect to the blockchain technology directly with existing banking systems and payment rails. This means someone can literally walk into a physical location, hand over cash, and have the value digitized and sent across the world on the Stellar network. Then the recipient can convert it back to cash in their local currency. No bank account needed. This is real world adoption. Stellar has been particularly successful in emerging markets and humanitarian use cases. Partnerships with IBM in 2017, they partnered with IBM to facilitate cross-border payments in the South Pacific region, which I alluded to a moment ago concerning something that has actually happened this week in December of 2025 with the Marshall Islands. We can get into that story and highlight that success rate and what has been implemented in another video. They've integrated with MoneyGram, allowing users to send and receive USDC at MoneyGram locations. And then even Franklin Templeton. Franklin On-Chain US Money Fund has over 580 million in assets as of late 2025 with their Benji token, representing one of the most successful tokenized treasury funds on blockchain. Stellar's goal in 2025, going into 2026, is to reach 300 billion in real-world assets, RWAs, across its entire network, up from 290 million at the end of December 2024. This represents a targeted 10x increase in the position of Stellar as a major player in the asset tokenization space. WireX, a Visa principal member, launched direct settlement of card payments in USDC and EURC on Stellar, allowing 7 million plus users to spend stablecoins globally with real-time processing. Recent protocol updates. Stellar has been aggressively upgrading its infrastructure. Protocol 23 WISC, implemented in September 2025, introduced parallel processing and unified events to improve scalability and reduce fees. Protocol 24 of October 2025 enhanced network efficiency and functionality. Released Protocol 20, enabling full-featured smart contracts to the network built in Rust for enhanced security. So over the next 12 to 36 months, here is the outlook for Stellar. Stellar's focus remains on institutional tokenization, continuing to position itself as the go-to blockchain for compliant tokenized and real-world assets, particularly treasuries and bonds. CBDC's development, working on central bank digital currencies as a pilot. Payment rails expansion, Swift's global shift to ISO 20022 messaging includes exploratory trials with Stellar for cross-border transactions, potentially enabling blockchain interoperability for CBDCs and tokenized assets. Stablecoin growth, with over 180 million of USDC on its network and growing partnerships with Visa and MasterCard alone. Here's why people care about Stellar. If you're someone who believes that financial services should be accessible to everyone, not just the wealthy and those who have bank accounts, then Stellar is building that infrastructure. An estimated 200 billion is lost every year in fees and inefficiencies just to move money across borders. Stellar is attacking that problem from the bottom up, focusing on billions of people who are underserved by traditional finance. So let's talk about understanding the difference between Ripple and Stellar, Ripple versus Stellar. Now that we understand both platforms, let's clarify the key distinctions, because these aren't competing technologies. They are complementary approaches to different markets. The target market difference is Ripple targets high-margin institutional clients, major banks, asset managers, payment processors, treasury departments moving millions and billions in daily volume. Their pitch is efficiency and compliance at scale. Stellar focuses on individuals, small businesses, NGOs, and emerging market populations. Their pitch is accessibility and financial inclusion. Ripple's aim is to capture a significant portion of cross-border payment market which has reached approximately 150 trillion as of 2022 and is expected to grow to 250 trillion by the end of 2027. Stellar aims to serve the billions of unbanked and underbanked people globally. The governance difference. Ripple exerts more control through blockchain's unique node list model by selecting validators, which gives them tighter control but raises questions about centralization. Stellar is more decentralized, with the Stellar Development Foundation allowing the community to choose validators and governance being more grassroots. Here's the speed and cost comparison. Both networks are exceptionally fast and cheap. XRP 3 to 5 second confirmation 0.002 per transaction. XLM 3 to 5 second confirmation 0.00001 per transaction, which is both fractions of pennies. In practice, the performance is nearly identical. The difference isn't technical speed, it's philosophical direction. Here's the tokenomics. XRP has a fixed supply of 100 billion tokens with approximately 59.13 billion in circulation as of this year, 2025. The remainder is held primarily in Ripple-controlled escrow accounts that release XRP on a scheduled basis. XLM has about 31.1 billion in circulation as of mid-2025, while the Stellar Development Foundation holds the majority of non-circulating tokens for ecosystem grants and development. Both use a fee-burning model where a tiny fraction of each token is destroyed with every transaction, slowly reducing the overall supply. Market performance, both assets experienced significant growth and gains in 2025. Through specific performance metrics, varying depend upon the time frame, obviously, that it's examined in. XRP demonstrated high volatility and strong institutional interest through 2025. Between October 2024 and mid of January 2025, XRP surged at approximately 50 cents to a peak of $3.40, representing roughly 580% in gains in under 3 months. This rally was from a large drive by the resolution of the SEC case against them and the U.S. presidential election outcome that favored crypto-friendly policies, and the launch of also that multiple spot XRP ETFs that happened here end of 2025. And as of mid-December 2025, XRP is trading around $1.92 with a market cap of approximately 116 to 126 billion. So XLM also saw notable gains in 2025. August of 2025, XLM was up approximately 36.4% year to date and 365.3% year on year, though it has had significant pullback since. This month of December 2025, XLM is trading around 24 cents with a market cap of approximately 7.73 billion. The key distinction in their 2025 performance, XRP showed higher volatility with a sharper peak and drive by institutional catalysts like ETF launches and regulatory clarity, while XLM demonstrated steadier growth focused on network utility and real-world payment adoption. This isn't a zero-sum game. Ripple pursues institutional partnership, regulatory compliance, and financial infrastructure solutions for high-valued players, while Stellar focuses on public access tools, community-driven applications, and ease of use for underbanked populations. Both can succeed because they're solving different problems for different people. However, if forced to pick based on near-term institutional adoption, the analysis from multiple sources conclude that XRP is favored to outperform XLM due to higher price targets, stronger institutional adoption, and more significant market catalyst, particularly the potential approval beyond the XRP ETFs. Stellar maintains the stronger philosophical case. Now we're going to dive into what RLUSD is, which is Ripple's regulated stablecoin. This is the most recent development The RLUSD is a USD denominated stablecoin, maintain a constant value of $1. Each token is backed by US dollar deposits, U.S. government bonds, and cash equivalents held in segregated accounts at depository institutions and security custodians. Think of it as a digital dollar that lives on blockchain networks and can move anywhere in the world in seconds. But it's always worth exactly $1 because it's backed by real reserves held by one of the world's most trusted custody banks. Here's the regulatory framework for it. This is crucial to understand. RLUSD operates under a New York Department of Financial Services limited purpose trust company charter, widely regarded as the premier regulatory standard worldwide. Back in July 2025, Ripple selected the Bank of New York Mellon Corporation for the primary custody of RLUSD reserves. BNY Mellon is one of the largest and most respected custodian banks globally, managing trillions in assets. RLUSD launched back mid-December 2024 and is available on Ripple's XRP ledger and Ethereum blockchain, but the expansion is accelerating. As of December of 2025, Ripple announced expansion of the RLUSD to Ethereum Layer 2 blockchains, including Base, Inc., and Unichain, with testing underway and public rollout expected at some point in 2026, final regulatory approvals. This will make RLUSD the first U.S. trusted regulated stablecoin to launch across these Layer 2 chains. Payment settlement. RLUSD is used to settle credit card transactions instantly on the XRP ledger through partnerships with MasterCard, WebBank, and Gemini. This extends beyond crypto trading into everyday financial infrastructure. DeFi liquidity. Ripple plans to pair RLUSD with wrapped XRP across multiple networks, creating deeper liquidity pools for payments, DeFi, and on-chain settlement. Deflationary mechanisms for XRP. Every RLUSD transaction on the XRP ledger incurs a minuscule fee which is burned, reducing the circulating supply of XRP. The more RLUSD used, the scarcer the XRP becomes. Integration with global finance. Projections into 2026, institutional lending is expected to include direct on-chain lending with under-collateralized loan options, integrating Ripple's RLUSD stablecoin and real-world assets. This means RLUSD isn't just for speculative trading, it's becoming collateral, settlement currency, and operational infrastructure for institutional finance. So why this matters? The stablecoin market is projected to reach nearly $3 trillion by 2028, but most existing stablecoins operate in regulatory gray areas. RLUSD is different. It's built from day one with regulatory compliance as a core feature. As traditional finance and digital assets converge, regulated stablecoins like RLUSD will become the rails on which moves value. Ripple is positioning itself early in this space with the strongest regulatory backing possible. And here now, we're going to speak of one of the most highlight-worthy points in this video segment concerning Ripple and its position as a global liquidity provider. I want us to let's zoom out and look at the bigger picture here and the strategy for Ripple. Ripple is positioning itself as a global liquidity provider for the entire global financial system, the entire world. And what does liquidity provider mean? In traditional finance, liquidity means having enough accessible capital, money, to settle transactions immediately. Banks and financial institutions need liquidity to move money, make markets, and serve customers. The problem is that liquidity is expensive to maintain. Those Nostro accounts we discussed earlier, with tens of trillions sitting idle across global banking systems, They represent trapped liquidity that costs banks money to maintain while generating no return. Ripple's vision is to liberate that capital by providing on-demand liquidity instead of pre-funded accounts. Their ODL, on-demand liquidity, is their signature product. And here's how it works. Instead of a bank maintaining funded accounts in 50 different countries, they hold their own capital in one place. When they need to make a payment to Japan, Mexico, or anywhere else, they use XRP as that bridge. The capital converts into XRP, moves instantly across the network, and converts into the local currency at that destination. No pre-funded accounts required. The liquidity appears on demand. If mainstream financial institutions integrate XRP for liquidity provisioning, particularly in regions like Japan, Latin America, and the Middle East, XRP's role as a bridge currency and remittance market would drive sustained demand. And to talk about the Hidden Road acquisition. This happened back early this year of 2025. Ripple acquired Hidden Road, a prime brokerage firm, for $1.2 billion. This is a big deal. Hidden Road clears about $3 trillion annually for hundreds of institutional clients and already works with Ripple's RLUSD stablecoin as collateral. Once integrated, Ripple will have a direct access to trillions in daily institutional trading volume. They're not just building infrastructure for banks, they're operating the infrastructure themselves. Let's talk about the integration of payments. Ripple Payments have processed $70 billion in volume across more than 90 markets and will integrate RLUSD by the end of 2025. The service covers 90% of daily foreign exchange markets. This positions RLUSD as settlement currency for a massive portion of the global FX transactions. So here's the competitive advantage. What makes Ripple's approach unique is their full stack strategy. They own the payment network, which is RippleNet. They maintain the public blockchain, which is XRP Ledger. They issue a regulated stablecoin, which is RLUSD. They acquire the brokerage infrastructure, which is Hidden Road. They have a regulatory approval to operate as a trust bank. Most blockchain companies have one or two of these pieces, but Ripple, they're building them all under one roof, and that's very important. And here's why. Over 33 blockchain-related mega rounds, 100 million plus, were supported by banks between 2020 and 2024, with institutions like JP Morgan Chase and SBI investing heavily in blockchain-based infrastructure. The money is already moving. Institutions recognize that blockchain settlement is inevitable. The question is, which infrastructure will they use? 90% of global finance leaders anticipate blockchain to have a significant or massive impact on finance within the next 3 years. So beyond 2025, here's a longer-term vision that Ripple has. Looking into central bank digital currencies, CBDCs, Ripple collaborates with central banks on CBDCs and highlights its role in shaping the future of tokenized assets. As governments digitize their currencies, they'll need settlement. Ripple is building relations now. Tokenized real-world assets. XRPL aims to drive institutional adoption through major partnerships to enable tokenized assets like gold and treasury bills on XRPL. Treasury operations. Ripple's integration of blockchain into treasury operations represents a fundamental shift as blockchain matures as core infrastructure for corporate finance. And the critical insight here that most people miss, Ripple isn't trying to replace banks. They're trying to become the infrastructure banks rely on. Every transaction that flows through RippleNet, every settlement made with RLUSD, every tokenized asset on the XRPL, these generate network effects and create dependency. In 10 years, the question won't be, do banks use blockchain? It will be, which blockchain infrastructure do banks use? Ripple is making a very aggressive play to be that answer to the question. That's why understanding Ripple's role as a liquidity provider, it matters. It's not just about one product or one token. It's about building the financial operating system for the digital age for the entire world. And that's a fundamentally different proposition than most cryptocurrency projects offer. So here's my thoughts on all of this. If you made it all the way through this video and us discussing what these entities are between Ripple and Stellar, XRP, XLM, RLUSD, you understand something that most people do not understand, even ones who are seasoned in this space. The real infrastructure is what's at play. It's running beneath the surface. It's being built that's new to replace the old. Ripple and Stellar aren't competitors. They're not competitors to Bitcoin or Ethereum. They're builders of something entirely different. The rails on which institutional value will move in this digital world. One is doing it for banks and corporations. The other one is doing it for individuals in emerging markets, and both matter very much. RLUSD isn't just another stablecoin trying to speculate its way to relevance. It's a regulated instrument designed from day one to plug into traditional finance. And Ripple's expansion into prime brokerage, trust banking, and payment infrastructure shows that they're not just building technology, they're building an institution. So over the next 12 to 36 months, will be critical. As regulatory clarity increases and institutional adoption accelerates, we'll see which infrastructure solutions gain traction and which fall away. One thing is for certain, the world of finance is being rewritten in real time. And now you understand the players who are writing it. If you enjoyed this content and you get value out of these videos, I ask that you please take a moment to like and to subscribe to this channel. It truly helps support us in the work that we're doing to get out a clear signal to people and a simple understanding of what these technologies are. Well, I want to thank you for being a part of this journey and for being here with me today. Until next time, I'm your host, Brian Christopher. Take care.